Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Wednesday, the 3rd of July. Starting off with the S&P, which has basically done us proud in the recent past with the unfilled gap to the upside and then a sideways consolidation, one of the more bullish features in the sense that we are consolidating above previous resistance after a gap and looking for this market ultimately maybe by the end of next month to hit 5,800, which is the top of that rising trend channel from back in September. If we do break down then the floor of the gap there towards 53.70 is the worst we're expecting at the moment. That's also the floor of the rising trend channel. Ideally we get away with 54.20, 54.40 just below recent support. Next up is the Nasdaq 100, and here we're looking for the well, we've already exceeded the big number there at 20,000 and looking for a fresh leg to the upside within that rising trend channel from April, maybe as high as 21,300 by the end of this month. You can see that the market hugging the floor of that channel there, and the 21,000 plus area does not now seem too difficult. If we do break down, recent support is towards 19,400, and that's the worst we're expecting at this stage. Ideally, we stay above the price channel floor at 19,600. Moving on to the stocks, and a decent selection, especially given the way that many of them are recent repeats. First one is Novis, where you can see we have the shares in a falling trend channel. Shares pushed through the 50-day moving average around the $7.35 area, and we're looking for as much as $18 by the end of next month, or even sooner than that, while we remain above the 50-day line. Next up is Beam Global, and here it's a classic bear trap situation, and if you look closely, it's a bear trap from below basically the 1-year support, the previous 1-year support around the $5.30 level. Above that, looking for at least the 50-day moving average towards $6 later this week, and maybe by the end of this month back up to the main resistance area, 660 plus, which has been in place since the end of April. Nice charting pattern delivered by the next company, Benetech, and here you can see rising trend channel after the unfilled gap to the upside, and basically a little bear trap rebound there to end June. The view at this stage is that the longer we stay above the 50-day line there at $8, the greater the chance of a move to $12 by the end of this month at the top of that rising trend channel from back in January. Moving along to a new name, which is Catcher, and here it looks as though we've got a rather volatile triangle situation on our hands, but the good news is that we closed above the old March support there around $9 and above that, looking for the top of the triangle as high as $13 by the end of this month. Heartbeam is next, and here rising trend channel, reasonable progress within that. That channel has been in place basically since back in September. Top of the channel there, heading for $3.50. We're looking for that over the next couple of weeks, while we remain above recent broken resistance at $2.60. A nice chart to follow as well now in the form of Roadzen, and here falling channel rebound, double rebound off that channel floor around $1.60, and above that looking for the top of the channel as high as $5.80 by the end of next month. Obviously the initial target here, the initial barrier, is the 50-day line at $3.20. Moving on to what's becoming something of a regular here, TRX8, and here you can see that we have basically, well, the shares have basically done what we wanted them to do, which was hit the top of that rising trend channel, right on the nose, in fact, around the $18.50 level. And basically now we're looking for the shares to retest resistance on the way down around the $26 level. Hopefully they can do that by the end of this month. The overall scenario here is that we could head up to as high as $32, the upper parallel of that rising trend channel, but at the moment let's just go for the easy target. Tesla's next, and seems to be giving us or reminding us of the rule that going short of the stock is not an easy thing to do, or sometimes not a wise thing to do either. Shares gapping up violently. It's a bear trap island reversal, the overall pattern here, so it suggests major turnaround here. Our second target there was towards $225 rather, and the next level up to $270 as soon as the end of this month. It really looks as though the shares have got a head of steam, and that consolidation above a rising 50-day line, a very good leading indicator on the upside for the shares. Another stock which has behaved itself is Vivacor, and here you can see why. We're just shy of that rising trend channel top, which looked rather wide and rather difficult to achieve, but let's say that's around the $3.40 area. Above that, looking for a fresh leg to the upside, and a February 2023 resistance line projection as high as $4.60 by the end of this month. Finishing off with another regular, and it's basically wheels up, hitting our triangle target. It seemed as though it might be a little bit ambitious, but we managed to flick that yesterday, $3.40, above $3.40, looking for up to $5 by the end of the month, and ideally we stay above that broken resistance line there from back in January, and the 50-day line in the $2.40 area. That's it for me today. More updates tomorrow.